Hello, hi, namaskar to all the viewers of this channel. My dear CA students, CA Foundation students, in the last session in a class 7, I explained so many important points to be remembered, right? Wherein let me recall few among them. One is free samples, subtract from purchases or take it on the credit side. Drawings in goods reduces the purchases. Under cost, take it in same side where the amount of stock is taken. Over cost, take it in opposite side where the amount of stock is taken. If there is a loss due to damage, loss due to flood, loss due to droughts, loss due to accident, loss due to fire, is to be taken at the debit side of trading account in the fourth point, my dear student. In the fifth one, when the purchases are not included in the stock, when the purchases are not included in the stock is to be taken in the same side where the amount of stock is written. When it comes to sixth point, my dear student, goods received on consignment is to be treated like a purchases comes in the debit side of trading account. Goods sent on consignment is to be valued only for unsold goods at the cost price. Goods sent on consignment is to be valued at cost price only for the unsold goods. Take it in such a place where the amount of stock is written. The last point, the seventh point, my dear children, that is when the goods are sent on approval basis. What? When the goods are sent on approval basis or return basis, please remember, if it is approved, if it is accepted, treated as a sales. If it is not accepted, if the still waiting period is there, we have to value only at the cost price, take the amount in such a place where the amount of stock is written. This is what I explained in the previous session, class 7, nearly for 30 minutes, my dear student. Please go through that class, make the note so clearly, the points, the hints. Then let us move on the class 8, the problem number 10 of this inventory chapter. Shall we, my dear students? Okay. Again, I used to tell you, I used to tell you, while valuing the stock, I never follow the statement method. I never follow the statement method. I always follow the trading account method. Please remember this. Fine. Shall we move on to the answer, my dear student? See what happened here. Inventory is valued in the next financial year, either before or after the closing the books of accounts. See here. A trader accounting year ended on 31st December 2021, but actual stock was taken on 23rd December, valued at 27,000. The stock is given on what date, my dear student? The stock is given on 23rd December. Fine. So let us write in your notes for a problem number 10. Stock on 23rd December, what date it is? 2021. How much it is? An amount of rupees 27,000. Okay. This is what the stock on 31st December 2020, 23rd December 2021. Then sales is given, purchases is there, sales returns are there. Sales are made at a profit of 25% on what? Cost price. Stocks are overcosted. Overcosted means what? Take it in opposite place where the amount of stock is written. Calculate the value of physical stock on 31st December. When to calculate? We have to calculate stock on 31st December 2021 question mark. Please, my dear students, try to observe the date. This is on 23rd December. This is on 31st December. Comparatively, when you compare the dates, 23rd December comes first, we can call it as opening stock. And here the stock is given and asked on 31st December, it is called a closing stock. That closing stock we have to calculate as a question mark. My dear student, in this particular type of problems, stocks are never valued on April 1st and 31st March, but the stocks are valued between the years, between the nearby the financial year. Sometimes maybe before closing the books of accounts, maybe 1 or 2 weeks before closing the books of account, or 1 or 2 weeks after closing the books of accounts. Fine. Now, what method Sudhakara used to follow? I used to follow the ascertainment of stock by using the trading account system. Okay. Shall we start, my dear student? See, stock on 23rd December is what stock? Opening stock. To stock on 23rd December. It is how much? 27,000. What is asked? Stock on 31st March 2021 is to be calculated as a balancing figure. Okay. Okay, I wrote balancing figure. Shall we move on to solution, my dear student? Sales between 23rd December to 31st December amounted to rupees 1500. Where to write the sales? Take the sales 1500 in the inner column because there is a sales returns. See, purchases during the same period 700. What it is? Purchases. You take purchases 700 in the inner column. Then sales returns and purchase returns during the above period is 280 rupees. How much sales returns? 200. Take 1300 in the outer column. How much purchase returns? It is an amount of rupees 80. It comes to 620. Correct? See what next. So, sales completed, purchases completed, returns completed. Sales are made at a profit of 25% of gross profit on cost price. Fine. Stocks sheet overcosted. What they have given? Overcosted. Overcosted means what? Take it in opposite side where the stock amount is written. Please remember, take it in opposite side where the stock amount is written. See, where the stock amount is written, I am showing you. Where the stock amount is written in the debit side. When the stock amount is written in the debit side, we have to take it on the opposite side. What is that? Stock sheet overcosted by stock sheet overcosted. How much amount it is? An amount of rupees 1000. So you write 1000 rupees. That's all right. This completes all the points. Now the profit is what? The sales are made at 25% gross profit on what price? Cost price. So now let us write to gross profits. How much it is? 25% on cost price. Am I right? 25% on cost price. Now, my dear student, we are not having a cost, we are having a sales. What it is? We are having a sales. That we have learnt in the class 1, class 2, class 3, class 4, class 5, wherein profit is given on cost, but we have a amount of sales. Then what to do? Take 1300 into 25 by not 100, it is 125. Did you understood? That's what we have learnt in earlier classes. Profit is given on cost, but we have an amount of sales. Both are mismatched. In such case, we have to take 25 by 125. 1300 into 25 by 125 is 260. Now, my dear students, you close the statement. Debit side is 27,880. Out of this, subtract 1000, subtract 1300. It comes 25,580. What it is? Stock on 31st March as a balancing figure. Either you write this in the beginning or else you can write it at the end, no problem. But usually whenever I read both the stock, I take immediately. Did you understood, my dear student? Out of 27,880, subtract 1300, subtract 1000. Then you are getting the balancing figure as a stock on 31st March 2021 is 25,580. This is what the stocks are valued in between near the ending of the financial year or after closing the financial year. Okay. Thank you, my dear student. Take care. Bye-bye. We will see you with the next problem in the next video. Until then, bye-bye. Namaskar.